here you go. Here's the first take on the index, looking pretty good.
Things have turned pretty quickly. Now we are, actually looking at a sell-off, and it's not just India. Days low on the Nifty.
For the markets at the days low, there has been a sharp decline. 100 points lower on the Nifty. 18,727 is the mark that we are looking at.
We're off the highs, most definitely so. It's not a complete collapse or anything, but it's a significant cool-off. I think one has to say that.
For the bulls would be a disappointing day because we came within kissing distance of the all-time high, barely 6 points off it, and then it was a near one-way slide on the way down.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra, and here are the headlines for the day. Sensex and Nifty failed to hold opening gains as financials see a sharp fall. Midcaps outperform with the midcap index ending at a record closing high. All 10 Adani Group stocks see a sharp decline. Hindustan Aeronautics gains in trade as it moves closer to seal a partnership with General Electric to make fighter jet engines in India. Sources say the deal will involve 80% of technology transfer to India. Shriram Finance sees a big share trade of over 2.6% of its equity worth about 1,400 crore rupees. The stock rallies post the deal, seen as providing an exit to a key stakeholder. NBFC named surge in positive brokerage notes. Bajaj Finance and M&M Finance gained the most. Nykaa jumps on a buy rating from Jefferies and Nomura. Titagarh Rail climbs nearly 10% after Antique Stock Broking initiates coverage on the firm. Kharif sowing hit as cyclone Biparjoy slows down the progress of monsoon. 37% rainfall deficit across India so far. Maharashtra and Madhya Pradesh witness high deficit. Met Department says that southwest monsoon will advance over several states in the next 2 to 3 days. Okay, let's move on to the first headline now. The Lal Street failed to hold opening gains with the Nifty and Sensex seeing cuts of 0.25% each. Financials led the fall and the Nifty Bank fell over 0.5%. ICICI Bank was the biggest laggard. Midcaps continue to outperform the blue chips to end at record highs. Prashant Nair is here with the day's trading highlights. Prashant.
Well, the market on the Nifty came within less than 10 points of a new all-time high, but then later slipped. Starting about 12:30 or so, the market started heading southwards, both on the Nifty and the Bank Nifty as well. Mid-caps and small caps, by the way, also cooled off. We were pointing out earlier in the morning before markets opened how on simple technical indicators, these two indices were looking a little overbought. So, from adding another 1% on a daily basis, these indices closed flat today. I'll get to stocks there in just a bit. So Nifty first, the gainers. HDFC Life added another 3% after Friday's strong gains on the back of the top management interview to CNBC-TV18. The Bajaj twins, both Finance and Finserv, were the other decent movers. On the downside, Adani Enterprises, Hero and Kotak Bank were some of the losses. Volumes were still on the side of gainers. So the list of volume-led losses is still short. Names like CG Power, Triveni Turbine, Bector Foods, Nucleus, Indocount. The volume-led gainers list is far longer, and you had names like Shriram Finance, JSPL, MRPL, Olectra Greentech, Wockhardt, Skipper, Paras Defense, HPL Power, Credit Access, eClerks, 5-Star, Inox Wind, and many more. As I said, volume still very much on the side of gainers, even though advanced decline was clean, almost 1:1. Now, US markets are shut, so when we come back tomorrow, there won't be any cues. Will the overbought nature of, at least in the near term, mid-caps and small caps provide us with some more cool-off kind of period? If that were to happen, that wouldn't be entirely unwelcome. Back to you.
Thank you, Prashant, for those highlights. In market opinion, Nilesh Shah of Kotak Mahindra AMC says that the market is fairly priced and hence investors need to be cautious while picking stocks. He also lays out his view on mutual fund industry.
It's a fairly priced market, neutral market, and one will have to be careful in picking up stocks at this point of time. The euphoria about India today is now with the FPIs. They were on exodus mood between October 21 to June 22, selling about $35 billion. And now they are buying back the same stocks at a higher prices. The local investors have been buying equity on a regular basis. By and large, they have been coming via mutual funds, right, rather than going directly into the market. By and large, they are focused on quality. So overall, retail investors have matured a lot. This is not to say that everything is hunky-dory in India. Even today, 89% of retail investors who are going to trading in FNO end up on the losing side. Do your SIP in mutual fund and participate in India growth story.
Okay, let's get you some more market opinion now. Prakash Khemka of White Oak Capital Management says that the China factor is working well for the Indian market. He also lays out his top sectoral bets.
About China, I think the leadership there for geopolitical priorities has what that has meant is the economic policies have taken a back seat. And that is playing to India's advantage when India is on the front foot in terms of its economic policies. We are end of the global rate cycle, and without a massive fall off in economic activity in the world's largest economy that was anticipated, and this largest EM market, as you pointed out, competitively falling behind India, I would say in economic terms, has meant a big boost to economic activity. Within India portfolios, obviously, we are fully invested as always, with largest exposure in sectors like financials and consumption. I think we always have to be watchful, but this time it doesn't seem like it is out of place compared to where the rest of the market is. Remember, prior 12 months, if you see, so as you rightly pointed out, this uplift in mid and small and micro caps is largely 2-3 months old. If you look at last year, 22, these segments had underperformed large caps. Not by a huge lot, but they had underperformed nonetheless. So there's been some time correction in this area.
Okay, that is the market opinion for you. To the second headline now. Hindustan Aeronautics closed at a record high. We learned from sources that the proposed General Electric HAL jet engine deal is set to pave the way for 80% of technology transfer and will happen in phases within India itself. Parikshit Luthra is standing by with more details on this one. Parikshit, what are your sources telling you?
Well, we believe that this deal has received approval from the highest political levels. India is going to get 80% technology transfer. We had asked for 100% technology transfer, but this somehow was not acceptable to the US administration, and there were also concern among some sections of the US Congress. So finally, it will be 80% technology transfer, which will happen over a 3-year period. In the first phase, we're likely to get manufacturing equipment from GE, which will be used to set up a production line, possibly in Koraput in Odisha, though the location for this co-production of the jet engine is still being worked on. We will get some parts, some assemblies of the jet engine for the next 2 to 3 years, and by the end of 3 years, we can expect, according to our sources, 80% of the local value addition to happen in India itself. Government sources saying this deal is unprecedented because US, UK, or France, for that matter, don't have a relationship or technology transfer with any country to this extent. India is also hoping this will give an impetus to the domestic defense manufacturing supply chain, as 500 to 600 MSMEs could benefit out of this deal. And it's not just this. We're signing an agreement on security of supply chains, reciprocal agreement on defense procurement. So this will really integrate the Indian defense industry with the supply chain in the United States and vice versa.
Okay, all right, Parikshit, thank you so much for joining us with those details. So that is about HAL. The stock ended higher in trade today. Moving on to the third headline today, Shriram Finance gained close to 5% on the back of a large block deal. 2.65% equity exchange hands worth 1,400 crore rupees. Nimesh is joining us with all those details. Nimesh?
Hi, sir. Biswara, the fact is that there was a large block, and looks to me that TPG was a seller in today's block deal. The stock has reacted sharply because the buyers apparently are strong names, is what I understand. The block happened in the block window, so there was no leakage as well. And it's a clean out trade as far as TPG is concerned. So the entire 2.6% which TPG sold has been sold now. So that's been done. The other important thing to track going forward would be the other large holder, which is Piramal Enterprises. They own 8.3% stake in Shriram Finance, and there could be the next potential large sellers. So that's something to track going forward. But in today's block, I understand TPG was a seller and some marquee names have bought. In fact, the management just spoke to us a few days back and they were quite bullish on the business going forward. So they expect a 10% growth overall in FY24 to continue. They expect a 10 to 20% growth in the two-wheeler segment and 10 to 15% growth in the farm equipment segment. So the businesses are good, the levers are in place. Now that the big overhang from TPG is out of the way, the stock has reacted sharply, and I understand some marquee names were buyer in today's block deal.
Okay, all right. Thank you, Ramesh, for all those details. The stock ended higher in trade today. Moving on, Dr. Reddy's was in focus today after the U.S. Food and Drug Administration, or the U.S. FDA, cleared the pharma company's API manufacturing facility with zero observations in Hyderabad. Ekta Batar joins us now. Ekta, give us more details on this one, though the stock ended at the day's low.
Well, yes, definitely good news which is coming for Dr. Reddy's, as they have cleared 2 facility inspections by the US drug regulator. Well, the first piece of news is that they have completed a GMP facility inspection, which is a good manufacturing practice inspection of the company's API facility at Hyderabad, which is CTO3. It was inspected from June 12th to 16th and was issued 0 observations or nil observations, which means that the facility has been given a green signal in this inspection. The second piece of news is that the US FDA has issued an establishment inspection report with a VAI, an EIR with a VAI, which means that again, they've been given a green signal by the US drug regulator. An EIR is basically a document which is issued after the inspection gets over and indicates what kind of status is been given to the facility. A voluntary action indicated status, which is a VAI status, basically allows the company to manufacture and indicates that the facility has been given the green signal by the US drug regulator. This particular plant was inspected in May this year and was issued 4 observations. It is a formulations manufacturing facility located at Srikakulam.
Okay, Ekta, thank you so much for joining us with all those details. Let's get in more specific, stock-specific news now. Larsen & Toubro gained after it bagged a major contract for the Mumbai-Ahmedabad bullet train project with a bid of over 15,000 crore rupees. Brokerage firm Macquarie believes this order win is a positive, and we have the analysis coming in with Vivek, who's joining us with more details on this one. Vivek.
Well, that's right. 2 important pieces of development as far as L&T is concerned. Number one, the company has been declared as the lowest bidder, or is now at the L1 status. Now, this is to construct almost over 135 kilometers for the Mumbai-Ahmedabad high-speed railway network. Now, remember, the company is L1 in the package C3. That is the third installment of the 508-kilometer mega Mumbai-Ahmedabad bullet train project. Now, so L&T's bid came in lowest, and it was a little over 15,697 crore. What Macquarie is saying is that, this is a very big positive given the recent narrow misses that the company saw as far as the few large order tendering activity was concerned. So Q1 FY24 order inflows very strong, coming in at close to 26,500 crore rupees, up almost 45% on a year-on-year basis. Remember, the FY24 order inflow guidance given by the company is between 12 to 14%. So Q1 is actually proving to be quite strong for the company. Now, additionally, what we are tracking is the fact that MSCI has gone ahead and upgraded the company's ESG rating to a double B from an earlier single B stance that they actually had earlier. Now, what Macquarie believes is that MSCI upgrading the ESG status actually helps alleviate another key concern as far as investors were concerned on L&T's defense exposure was concerned. Now, just to give some background, the MSCI ESG rating actually helps investors to go ahead and make investment decisions, especially given they actually have a certain amount of bias against stocks that are present in certain industries, defense being one amongst them.
Oh yes, defense has been one of the buzzing stocks. L&T in focus on the back of a number of news updates. Vivek, thank you so much for those details. Time for a short break now, but stay tuned. We'll be back in a bit with the other headlines. Welcome back. You're still with us in Markets Today. Let's go to the rest of the headlines that we are tracking for you. The fourth headline now. A whole host of NBFCs gained on the back of a bullish brokerage commentary. JP Morgan says that Bajaj Finance and L&T Finance are their top picks. And we do have Ekta Batra with the roundup of all the stocks which are in focus on the back of this brokerage note. Ekta.
Thanks for that. Well, yes, definitely a lot of bullish calls which have come in on brokerages, on NBFCs from brokerages today. I'll start with JP Morgan, where they say there is a perennial boom-bust cycle of NBFCs, which is again recovering and may last for the next 4 to 5 years. Both domestic as well as foreign investors suggest under allocation to this segment. There is scope to add beta and portfolios via NBFCs. They like Bajaj Finance and L&T Finance, which are their top picks. Morgan Stanley says in the large cap quality group, key picks are Bajaj Finance and SBI Cards. Manappuram, PNB Housing, Shriram Finance can give outsized returns. Outsized returns are likely in high quality insurance names such as SBI Life, HDFC Life, ICICI Pru. HSBC, as a strong EPS growth cycle continues for NBFCs, they can continue to outperform according to them. They've upgraded M&M Financial from hold to buy, and a target price is raised to 360. They have a buy on Bajaj Finance, Chola, LIC Housing, Credit Access, L&T Finance, SBI Cards, and raise the target price for all of them. The list should be up on your screen.
Okay, all right, Ekta, thank you for that. Five-Star Finance rallied nearly 8% after Nomura initiated coverage on the stock. Nomura said that the company is highly profitable, among the fastest growing NBFCs in a niche market. Surbhi Sataria is joining us with details on this one. Surbhi, what does the note say?
They have initiated a coverage with a target price of 750. Nomura says that it is highly profitable and amongst the fastest growing NBFC in a niche market. They estimate the company to deliver a 30% AUM growth in the next 3 financial years, which will be driven by a significant untapped opportunity in the MSME segment, specifically in the niche small business loans, which is a loan with a ticket size of less than 10 lakh rupees. They see continuous expansion with 50 to 60 new branches expected in every year. So these two are the primarily the growth levers for the 5-star small business.
All right, thank you, Surbhi, for that. Let's get in some more brokerage views now. Nykaa gained 3% after Jefferies and Nomura put out a buy rating for the stock. Meanwhile, Macquarie has an underperform call. Mangalam is joining us to tell about the brokerage views and why the stock was up 4.5%. Mangalam.
Nykaa saw a big rally on Friday as the analyst meet was underway, and we were talking about how the key positive from there was the company looking at profitable growth across multiple vectors. Growth was on their cards, and they wanted to increase their total addressable market to $180 billion by 2027 as well. And today we have some brokerage notes coming in too. Jefferies, for instance, believes that the premiumization trend plays well in favor of Nykaa given its positioning, and it has a lot of categories where it has a strong right to win. They have a buy rating with a target price of 200 on the stock. We also have a note coming in from Nomura saying that despite the growth opportunities that the company provides, it's trading at 5 times FY25 EV to sales, which is currently attractive. And going forward, they believe that beauty and fashion industry should grow anywhere between 27 to 29% at a compounded level. They have a target price of 183. And Macquarie, however, is slightly circumspect. They have an underperformed rating with a target price of 115. And the reason why they don't like it is mainly because, there is no medium-term growth or profitability target given by the company in the analyst day. And at the same time, they're a little concerned about competition and the capital allocation that the company will make in times of competition as well.
Okay, all right. That is on Nykaa. But Mangalam, stay with us. Titagarh Rail Systems also surged about 10%. This is after Antique Stock Broking initiated coverage on the stock. Mangalam, tell us more on this one.
Well, after a 350% rally in the last 12 months and over a 100% rally in 2023 itself, Antique believes there's a lot more room for Titagarh wagons from here as well. Almost 50% basis its initiating coverage. They've initiated coverage on the stock with a buy rating and a target price of almost 694 odd rupees. They expect the company to post earnings compounded growth of over 50% over the next 3 years. In fact, the return on equity of the company is what they believe could be over 25% as well. They say that, yes, the stock has meaningfully appreciated in the last 12 months, but it still undervalues the kind of potential that railway orders and the execution that comes by. In fact, going forward, they believe that the company still trades at 12 times FY25 earnings, which is pretty cheap given the sort of opportunity that lies, and which is why they are positive.
10% higher today. Titagarh Rail Systems is in focus. Moving on to the fifth headline now. Kharif sowing has been hit significantly as cyclone Biparjoy slowed down the progress of monsoon in India. Data from the Agriculture Ministry shows that India is facing 37% deficit rainfall so far, and Maharashtra and Madhya Pradesh have witnessed the highest deficit. The Indian Met Department has said that southwest monsoon is expected to advance over several states in the next 2 to 3 days. Manisha Gupta joins us now. Manisha, what are you picking up on this?
Well, yes, the monsoon until now has been a concern. It was a delayed monsoon in sense of onset, and the onset itself was weak, and the progress has been weak as well. And all of that really seems to be bothering the overall agriculture sowing. If you look at the overall number for India until now in sense of monsoon, we are down by nearly 37%. Maharashtra is one of the most deficient states in sense of rainfall right now at around 86%. Madhya Pradesh, 93% deficient. You have Telangana, 82% deficient. The IMD, of course, seems to be saying that the next 2 to 3 days are important. After that is when you would see progress of monsoon within Mumbai, Maharashtra and the rest of the states. And they also say that the first half of July is expected to be on the positive. There is still clarity awaited on the second half of July though. But what is really getting hit is the sowing numbers right now. We're already delayed by 10 to 15 days in sense of sowing, and the sowing might pick up as we look at the next fortnight or so. But it really is going to be a delayed sowing, so a delayed harvest, and then the yield and quality as per the weather changes as we go into the next months is something that can bother the crop as well. The numbers itself are on the weaker side, especially for important crops like paddy, which is down 14% in sense of sowing area as compared to previous year. Pulses is down 57%. Oil seeds is down 14% as well. The couple of crops which have actually done well is cotton up 6% and coarse cereals is up by 64% as well. But all eyes on the sky really, especially in the next week, where there is an expectation that the stalled monsoon just out of Maharashtra could be entering the state finally.
Actually, when the system was there, all the winds, they tend to organize themselves around the system. So in a way, it had sucked away all the moisture and the system was far away from the west coast. But now, since the system has made a landfall, slowly the westerlies have set in, as you can see in this, and we expect these westerlies to gain strength in the coming 2 or 3 days. That is why we expect these conditions are favorable for the onset of monsoon.
Okay, that is the monsoon update. There is a deficit, 37% deficit at what we are seeing, and the worst affected state is Maharashtra. Moving on, yet another Indian pharma company, this time Mumbai-based Sensex, is now under the lens. Its paracetamol drug has been found to be toxic by Nigerian drug regulators. Ekta Batra is here to tell us what's behind the recent spate of toxic drugs and what regulators are doing to combat the menace. Ekta.
Another Indian company has come under the scanner for substandard drugs. Nigerian drug regulators, the Nigerian National Food and Drug Administration, has indicated that Mumbai-based Sensex paracetamol drug, Para-Clear Suspension 125, is said to contain the toxic substance ethylene glycol. The product failed toxicity tests with deaths of 5 lab animals recorded. No human fatalities were associated with this event. Sensex paracetamol joins the list of other Indian companies whose drugs were said to contain these toxic substances, from Made in Pharma's cough syrups being allegedly linked to the death of over 65 children in Gambia, while Marion Biotech's cough syrup was linked to the alleged death of 18 children in Uzbekistan, to WHO issuing an alert on a cough syrup manufactured by Punjab-based QP Pharmachem and marketed by Haryana-based Trillium Pharma. The Indian government has refuted allegations on Made in Pharma. Instances of contamination with ethylene glycol and diethylene glycol have been widespread recently. As of Jan 2023, it was linked to at least 7 countries and associated with more than 300 fatalities in 3 of these countries in just a few months. And while India might have a number of companies who have been caught in the crossfire due to also because of its large presence in the pharmaceutical industry, it's not just Indian companies which are linked to supplying drugs laced with these toxic substances. For example, an alert was issued last year for Indonesian-made syrups that are likely to have poisoned more than 200 children in the country, while Cameroon's health regulator was investigating the death of 6 children linked to a cough syrup which was allegedly manufactured by a Chinese company. The reason the issue is so widespread and difficult to identify, experts say, is because of the contamination of the supply chain that is obscure and difficult to track. Pharmaceutical manufacturers generally obtain inputs from external suppliers, and most often than not goes untested, especially by the lower quality pharma companies. Now, one of the theories is also because of the prices of the generally used safe input propylene glycol spiking in 2021. It was substituted by some corrupt parties with toxic alternatives such as ethylene glycol and diethylene glycol, and some pharma companies too switched from pharma to chemical suppliers. For example, Indonesian authorities had pointed out a reason for contamination was a local trader selling the industrial grade input as a pharma grade. Now, the fear is that there could be more incidents, as one cannot track how much of the supply chain is infiltrated when it comes to both the inputs stored at warehouses to the finished products distributed. However, government and agencies are now becoming more proactive. The WHO has urged all countries to step up surveillance and offered support to those that lack resources. The US drug regulator too has issued a guidance on testing high-risk drug components. An example of this proactiveness was the latest case with Sinicare, where the oral painkiller paracetamol was tested by Nigeria on behalf of Liberia. India too has been turning the screws. The government has cancelled licenses of 18 pharma companies allegedly manufacturing spurious drugs to testing of cough syrups at government labs before exporting, and in some instances asking companies to stop procuring inputs from certain companies that had possibly supplied to companies linked to recent incidents.
Ekta, thank you so much for joining us with that important story. With that, it's a wrap on this edition of Markets Today. Thank you for watching.